let's understand the real goal when trading. Liquidity is the name of the game, also known as supply and demand zones. There are an enormous amount of trading courses, techniques, indicators, and gurus selling the idea that they have the correct key in order for you to make money. First, you just need to understand the game you are playing in. Let's have this example. American football, just as any other sport, has these very basic elements in order for the game to be played. Here you have the field. This creates the outline where the players can perform their game. This is the most basic element in every action, the space where it will take place. Here comes the touchdown zones. This is the specific space where every player will try to get in order to win the game. Then you have the ball, the physical element that every play will try to take so they can put a foot in the touchdown zone at any price. Now it's starting to look similar when trading. As you can see, the main objective of this game is to put a foot inside these specific zones. The team who will do it more will win. Now that you have the entire picture of the game, it's easier to create the correct play in order to reach that zone. Now let's jump up to trading in order to have the general view of our field, the chart. Here we have a share, in this case, Facebook. The orange rectangles represent the touchdown zone in our game. These supply and demand zones show us where the liquidity really is. You see, the market doesn't retest certain prices just for the sake of retest. The price is always in search of liquidity and it will follow wherever there is. The green dot represents where the liquidity has been created, and the red one represents where it has been taken. Up to this point it seems pretty similar to what other courses have thought. But something is missing. We already know what the touchdown zones are, but don't have outlined the field. This is where the channel technique takes an important place when outlining the field. As you see, now it's easier to underline the boundaries of our game. We have the external channel lines and the central line represented in a dotted line. You can see how the price, because of the institutional traders such as banks and hedge funds, is always structured in channels. This is the backbone of trading. But even when the channel represents the field, the goal still being the same, liquidity. Let's have another example. In this case, we have Tesla. It's the same story. We have our touchdown zones where the liquidity has been created and closed. And then again, we have the field the channel creates. This is where the price will bounce in a certain period of time. This is the secret weapon of institutional traders. Now, a different example, in this case Bitcoin versus US dollar. The same story, we have the orange zones where the liquidity is. The green dot represents when it has been opened and the red one when it has been closed. Pretty much the same. Now, with channeling techniques, we can see where the price has been and where it will be. We have outlined our field. Nothing shining, just facts. This is gold versus the US dollar. Same picture as the previous, we have our touchdown zones represented in orange. The green dots show where the liquidity has been opened, and the red dots where the liquidity has been closed. And then, we have our field created by this channel, where we have the external lines and mid-channel as well. You can see how price respects external and mid-channel lines. As American football, once you have outlined the field and have a clear view of where the touchdown zone is, the left thing to do is to create your game plan based on the fundamental analysis and technical analysis with these three types of indicators. This is the way 7 and 8 figure traders used to play.